Dubai and Phuket are very, very different markets altogether. Dubai has a population of 4 million active residents and a daily active population of 5 million. So that means 4 million people who live there and another 1 million who come in every day as tourists or workers. Phuket, on the other hand, has a daily active population of less than 1 million. The types of buyers that you have in destinations are very, very similar. Owner-occupiers, yield and growth seekers, resident seekers, people who are living there because they want to get a visa to live and enjoy the country or the community that they're staying in. The demographics, the makeup of the community that is investing in property is extremely different. In Dubai, 75% of investors are made up of Indians, the primary market. UK is the second market. Chinese, Saudi Arabian, and Russian. They're the top 5 groups of investors that drive 75% of the investment market in Dubai. Here we have the same reasons for people wanting to come and live, but the demographics of buyers are very different. So we're moving, as I explained earlier, from a Russian demographic more to a European, Polish, German, Swiss demographic, and to Asia-based expatriates. So we focus on those as our buying segment. Dubai tries to emulate Singapore, and it wants to be the Singapore of the Middle East. It aspires to be a vibrant, safe economy and thus attract people to move there and make a new life. So Dubai itself needs to be safe, stable, and progressive. Phuket is very, very different. Phuket is a natural, unspoiled island. It has a much smaller population, yet it attracts a significant amount of visitors. I believe far more so than Dubai. So why are people coming to Phuket? They come for several reasons, and you can sum that up as perhaps escaping the rat race of Europe, the daily pressures of life, the high tax regimes that they have across the European Union, and I think a daily onslaught of generally poor press or negative media. Phuket offers a complete change of lifestyle to all of that. But importantly for the investors, we are not in a volatile geopolitical region. We're in a very stable region in Asia. We don't face the current issues that unfortunately the Middle East faces today. And for that point alone, it's extremely valuable to property investors to be in a safe geopolitical location rather than something that is more volatile and perhaps more risky. So your investment is perhaps a little safer in Phuket than the Middle East region at the moment. One is an Asian trust value set that we adapt to and learn while we're over here, and the other is a European value trust set. So I've been in Asia now for 36 years, been doing business all across the Asia-Pacific region. And if you look at the Asian value set, then they're based upon 3 really important factors. It's very deeply personal, your relationship with the other person. It's reciprocal on another level, and the relationship is long-term. So there are 3 key factors for building relationships within the Asian business world. If you look at Western values towards trust in particular, they're built upon very hard notions such as the person's credentials that you're dealing with, contracts and agreements as well. Everything must be written down, and the reputation of either the company that you're dealing with or the person that you're dealing with. So if you ask me, how do you build trust with somebody who are thousands of kilometers away, I think as we're in Asia, we must blend the 2 sets of trust values together. We build long-term relationships, we build respect for the people that we work with. We have very strong contractual obligations to the people that that we work with, and these are founded in a company that was established some 20 years ago, and to be perfectly honest, probably wouldn't be here today if it didn't get the respect from the many clients that it's been dealing with over time. So at the end of the day, trust is very personal, but we try to blend Western trust values with Asian trust values as well to give a perfect mix. So the market is continually evolving, and as a market evolves, any market evolves, as an organization you need to adapt to that market. And if you're really perceptive, you're able to look a little bit ahead of the curve and predict where the market should be moving to and develop products that are in line with the future demands of our customers. The market is now evolving into more curated services. And what do I mean by that? We are developing products ourselves, such as the Trees residences that are both a hotel and residence. So that means that the hotel that the residences are attached to provide all the services and all the benefits to the buyers or investors of the residences within that hotel. So they benefit from the booking system, they benefit from concierge services, they benefit from housekeeping, from room services, from all of the hotel facilities, and it takes the pain point away. Managing a condominium yourself and preparing for your stays or your overseas trips, you can fully benefit from hotel services and the residences that attach by it. Everything is provided for you. In addition, we're seeing a trend that is moving further away from freehold, which was very popular sort of 5 years ago, more trust that has been put into leasehold purchases. And leasehold contracts, in my humble opinion, are as good as a freehold contract. They give you a high degree of security, and of course the premium that you pay for a leasehold contract versus a freehold contract is less. So if you're looking for investment terms, then your return on investment on a leasehold property can be marginally improved over a freehold property. Last point, and probably one of the most important points, is that I think that there's a general improvement in awareness that I don't know how you would say this in another language, but the early bird gets the worm, and that is that the first movers are always the ones who will benefit. So there's recognition certainly within the overseas investment community, that if you're first into a project as an early investor, then you're going to benefit from the best pricing and the best available units together within that project. And that's based upon the reality. Developers always will increase the price of the project as construction progresses. So if you're in early, you benefit from a long trail of price increases over a fairly short period of time, much more so than you would otherwise benefit from perhaps a bond or a bank deposit.